Hello, my dear future chartered accountants. This is CH in my Hegde. We are moving on with the FR upgradation classes. I hope my voice is audible and the PPT is visible. Just a reminder, these are not revision classes and these are not a substitute for revision classes. These are upgradation classes, the problems for updated problems. In the study material, RTP, MTP and suggested answers. The material for this is available in the Telegram channel, link for which is available in the description. So we have discussed problems on Ind AS 1, presentation of financial statements, Ind AS 34, interim financial reporting, Ind AS 7, cash flow statement. Then we moved on to Ind AS 27, that is consolidation and separate financial statements, Ind AS 110, and now we are going to do Ind AS 111. So I hope the material is already available with you before starting the sessions. The material is shared as a PDF format in the Telegram channel. Okay, so let's move on. Let's read this problem. ABC Limited and DF Limited have entered into a contractual arrangement to manufacture a product. Okay, they have come together and they are going to manufacture a product and sell that in the retail market. So what is the important identification here? ABC Limited and DF Limited are coming together, but they are not forming any new entity. They're coming together, starting a product, but they're not started a separate entity for this purpose. So far, this in the information. As per the terms of the arrangement, decision about the relevant activities requires consent of both the parties. The parties share the returns of the arrangement equally amongst them. Whether the arrangement can be treated as joint arrangement. This is a typical case of joint operation because you see both the parties consent is required. So one party can stop another party from taking the decisions. In other words, unless both of them agree unanimously, a decision cannot be taken. So this is a clear case of joint operation. So arrangement is a joint arrangement. Since both the parties are bound by contractual arrangement, that is also important. Mere people coming together is not sufficient. That is, they are having a joint arrangement. That is, they need to have a contractual arrangement as well that both of them should agree. That need not be in writing, but it has to be in some form or the another. Requires unanimous consent of both the parties. So very clear, straightforward answer. Yes, it requires both the approvals. Therefore, it is joint operation. I mean, joint venture, and the type of operation is joint operation. Moving on to the next one. PQR Limited and XYZ Limited established an arrangement in which 50% of the voting rights and the contractual arrangement specifies that at least 51% of the voting rights are required to make the decision about relevant activities. Whether the arrangement can be treated as joint arrangement. Straightforward answer again. I have 50%, you have 50%. And it requires 51%, which means ultimately both of us should agree. Because if I say it will be only 50, requires 51%. So one person's consent is not sufficient. One person's vote is not sufficient. You require both the parties to come together. Both the parties means it requires a unanimous consent of both the parties. One party can stop another party from taking a unanimous decision. Both the parties are required. Joint consent is required. and the contractual arrangement is in place, yes, this is also implicitly they have the joint control. Yes, they have the joint control. Next one, A Limited, B Limited, and C Limited establish an arrangement whereby A Limited has 50% of the voting rights in the arrangement, B Limited has 30%, and C Limited has 20%. So 50, 30, 20. The contractual arrangement between A, B, C specified that at least 75% of the voting rights are required to make a decision about the relevant activities, whether the arrangement can be treated as joint arrangement. Now, what is the pattern? 50, 30, 20. Okay, that is arrangement, and it requires at least 75% to make the arrangement. Okay, now here directly they don't have a contractual arrangement between ABC. Nothing is there because A and B, ABC are having 50, 30, 20, but A and B have not made an arrangement. B and C have not made an arrangement. A and C have not made an arrangement. So there is no explicit arrangement. So you should make those that there is no explicit contractual arrangement. If an explicit contractual arrangement was there, then we could have told, yes, there is a joint operation, there is a joint venture. If the shareholders have an agreement among themselves, written or oral, some kind of contractual arrangement. But here there is no arrangement, agreement between the shareholders, between the parties. Okay, then if explicit is not available, then we'll go for implicit. Is there an implicit joint control? Okay. How can we say whether there is an implicit joint control? Whether one party can stop from another party or one party's consent is must, definite, required. Look at the share percentage 50, 30, 20 and 75% is required. Now, A Limited having the 50% can definitely stop other two people from making the decision. Because if A has 50%, without A's consent, decision cannot be taken. Because if he says no, a resolution will not be passed. Decision cannot be implemented. Okay, now what about B? B also same thing, my dear friends, because he's having 30%, required 75. If he says no, remaining people 70% also cannot take the decision on their own. So in other words, A Limited can stop the decision of others. B Limited can stop the decision of others. So indirectly, implicitly, unless A and B agrees together, the decision cannot be taken. Remember, in the same problem, if it was not a 50, 30, 20, if it was a 40, 30, 30, then any of the three combinations, any of, okay, let me first complete this, then I'll give another example. Now, in this case, A, without A consent, decision cannot be taken. Without B consent, decision cannot be taken. C may be required, may not be required. He is not really relevant here because that is not going to add anything to the decision you are going to take. He may say yes, he may say no, but two parties that must be agreeing upon to take the decisions are A and B. Therefore, there is implicit joint control. So, there is implicit joint control because both consent of A limited and B limited are required. Both the consent of A limited and B limited are required. Now imagine if A has, let's say, 40% or let's say 35%, B has 35%, C has 30%. Now in this case, if the same question say at least 75%, then all three should say yes, right? Because A cannot make that, A can stop the decision, B can stop the decision, C also can stop the decision because they are having 30. And if C says no, then it will fall short of 75. So all the three persons have joint control if the voting share was 35, 35, 30. And in this example 35, 35, 30, if it was not 75%, if it is 55%, now tell me what would be the situation. Can you think? I'll give 1 minute for you to think. The shareholding percentage is 35, 35, 30 and the minimum requirement is 55%. Now tell me, who do you think have the joint control? How do you think? Can A stop the decision? Can B stop the decision? Can C stop the decision? Think about A. Can A stop the decision? A say no, 35, out. Remaining B and C can join. If B says no, A and C can join, 35 plus 30 can become 65. If C says no, 35, 35, 70 can pass the resolution. So, one person individually cannot make the decision and one person individually cannot stop the decision. Sir, then people have to come together, sir. Yes, and if people have to come together, does it mean they have joint control? No. So A and B, 35, 35, 70, it will cross 55. So can we say A and B have joint control? No. Sir, A and B, 35, 35, 70, they can make the joint decision. They can make the joint decision, but are they obliged to do it? No, right? If A and B having a contractual arrangement between themselves that we have to agree upon, then only we will make a joint vote. And that means A and B will always have a discussion among them and A and B will come with single decision. Yes, if there is a contractual arrangement between A and B to make a common vote, there is a contractual arrangement between A and B to make a unanimous decision, then you can say that there is a joint operation. But in my example, 35, 35, any three combinations can give the vote, can make the majority vote, and a decision cannot be taken. So, unless there is a contractual arrangement between the two parties, there will be no explicit joint control, no implicit joint control. But in this example, which is the problem given 50, 30, 20, there is no explicit joint control, but there is implicit joint control because A and B's consent is a must to make a decision. Hope you got the point. I'll go further. An arrangement has three parties. X Limited has 50% of the voting rights in the arrangement. Y Limited has and Z Limited have 25% each. The contractual arrangement between them specifies that at least 75% of the voting rights required to make the decision about the relevant activities of the management, whether the arrangement can be treated as a joint arrangement. So you have the arrangement as 50, 25, 25, and at least 75% is required. At least 75%. Now, definitely individual cannot make the decision, 75% required. So, A limited, they can have along with B limited, or A limited can make the decision along with C limited. I mean, not A limited, B limited, X limited, Y limited. X limited along with Y limited can make the decision, or X limited along with Z limited can make the decision. So it needs the another support. But definitely there is no explicit joint control. Is there implicit joint control? That depends on whether there is any contractual arrangement between the two parties. Because if X and Y, are they obliged to say yes? They can differ. Similarly, X and Z, are they obliged to say yes? No, they can differ, which means if there is no contractual arrangement between themselves, either X and Y or X and Z, Y and Z does not matter, then we can say there will not be any joint control. Let's see what the solution says. In this case, even though X limited can block the decision, yes, X limited can stop it, but it does not control arrangement because it needs the support agreement of either Y limited or Z limited, 50 plus 25 or another 25 to make it till 75 at least. In this question, X limited, Y limited, Z limited collectively control the arrangement. However, there is no more than one combination of parties that can agree to each 75% of voting rights. In such a situation, joint arrangement, contractual arrangement between the parties would need to specify which combination of the parties required unanimously decision of the relevant activities of the arrangement. So basically, they are telling if there is no contractual arrangement between the parties, there is no joint venture. There is no joint control. Fine. An arrangement has A limited and B limited, each having 35% of the voting rights in the arrangement, with the remaining 30% being widely dispersed. Okay, let's present it. A limited and B limited, each having 35%. Okay, so A limited has 35 and B limited have 35. And remaining are widely spread. Remaining 30% are widely spread. That means many people have ownership of this. Widely spread. Decision about the relevant activities require approval by majority of the voting rights. Whether the arrangement can be treated as joint arrangement. Now, what is the facts of the case is? First of all, is A limited and B limited decision compulsorily required? Do they have to come together? A limited, can they stop decision A limited? No. Majority means 35% here, some 15-16% here, majority is crossed. It may not be one person, maybe other persons put together. So no, sir. Think like this, sir. How? A limited 35, B limited 35, put together 70, 70 more than majority. So A limited, B limited, together, can they control the company? Yes, they can control the company. So they have joint control. Don't think like that. Don't think like that. If you want to say joint control, there has to be two specific conditions. One, you should be able to stop other from making the decision. That means your presence is a must. You have control. That's the meaning of it. And other person's presence is also a must. In the sense, you say 35%, other person is having 35. If you come together, you control. But the question is, should you come together? Are you obliged to come together? Can you differ in the vote? Yes, right? A limited can say yes, B limited can say no. Therefore, A limited and B limited have joint control only, only if contractual arrangement specifies that decisions about the relevant activities of both A limited and B limited agreeing. So basically tells you either explicitly or implicitly there should be a situation where A limited consent is required, B limited consent is required. Both limited concerned are must. There has to be agreement between themselves or some sort of indication that both of them should say yes to make a decision. If you have such kind of contractual arrangements, then you say there is joint control. Should A limited, B limited come together necessarily to make a decision? No, right? In this example, at least, if you limit yourself to the information given, A limited can have 35, remaining people some 20%, they come together 55, so B limit consent is not really required. So then you cannot say based on this information. So unless there is agreement, unless there is a contractual arrangement, there is no joint control based on this information. But instead has given solution conditionally, situationally, that is a mere 35-35 is not sufficient. If they have a contractual arrangement, then you can say there is joint control. Hope you understood. I'll go further. Next. Okay. Electronics Limited is established by two investors, R Limited, S Limited. Investors are holding 60% and 40% of voting the power of investee respectively. Okay, so one is having 60%, other is having 40%. So looking at the information at this stage, it appears, oh, you're having 60%, you have the control. That is what AS21 will take. That is what rule-based system will say. But we are not looking at the rule based, we are looking at the principle based, we are looking at the situations. So for you to have the control, you need to have the power, variable returns, and power to make the change in variable returns, power to link both. So you should look at more information. Of course, if nothing else is there, person having 60% is said to have the control. But let's read it. As per the Articles of Association of Electronics Limited, both investors have right to appoint two directors on each of the board of directors limited. Oh, your shares might be 60%, 40%, but both of you can appoint two directors. Now the question comes, who has the control? Director have the control or shareholders have the control? Don't go to law. Directors are agents of shareholder. Directors can only do what shareholders can do. I'm not going for those rules. We are going for the principal activities. Let's see. Directors appointed by each investor will act in accordance with directions of investor who has appointed with some director. Further, Articles of Association provide decision about relevant activities of the entity taken by the board of directors through a simple majority in board of directors. Relevant activities. Determine whether Electronics Limited is controlled by single investor or jointly controlled by both the investors. Now, in this case, again, if the rule based goes, you have 60% of the voting rights, you control. We don't go by the rules, we go by the principles. What does the principle says? Look at the relevant activities of the organization, and of the relevant activities of the organization, who decides, who takes the decision. Now, in this case, relevant activities are decided by board of directors. How many board of directors are there? 4. 2 appointed by 60% of the people, to appoint it by 40% of the people. They also said they will speak, they will listen to their respective appointers. So two directors will listen to 60% of the people. Remaining two directors will listen to the 40% of the people. So there are totally 2 plus 2, 4 directors. Now for you to make the decision, they said you require a simple majority, which means these two directors or these two directors should combine, say yes or no. In the sense, if these group, let's say group 1, group 2, if group 1 says no, group 2 cannot make the decision on their own because they have only 50% of the weight in board of directors. If group 2 says no, group 1 cannot make a decision on their own, which means there is an implicit joint control. Let's see what the solution says. Decision about relevant activities required to be taken by majority out of 4 directors. At least 3 directors need to pass a resolution. Accordingly, board directors appointed by one investor cannot take decision independently without the consent of at least one director. Hence, electronic limited jointly control. Yes, it is jointly control, implicit joint control by both the parties. Are limited holding the majority of the voting rights is not relevant because voting rights do not given the power over the relevant activities of the investee. So they say relevant activities are decided by board of directors. So shareholding pattern does not matter. The way you appoint the directors matters, and the directors are having a 2 plus 2. So both the consent is required for you to make the decision. So there is a joint control. Next, MN Software Limited is established by two investors, M Limited, M Limited. Both the investors are holding 50% of the voting rights, voting power of each of the investee. As per the Articles of Association, MN Software Limited, both the investors have right to appoint two directors each of the company. I have 50, I have 50. I appoint two, you appoint two. Simple. Directors appointed by each investor will act in accordance with the directions of the investor who has appointed such director. So I have appointed to two, they will listen to me. You have appointed two, and they will listen to you. The decision about the relevant activities or entity will be taken by board of directors through a simple majority. Articles of Association also provides, read this, important. Articles of Association also provides M Limited has the right to appoint the chairman of the board and who will have the right of a casting vote in case of deadlock situation, determine whether M Software Limited is jointly controlled by both the investors. So what do you think in this situation would happen? Both the parties have, both both the groups have two directors in the representation. Yes, correct. So if the situation is very simple, unless both agree, a decision cannot be taken. 2 plus 2, majority required. But there is one additional catch. In case of a deadlock, in the sense A says 2, B says 2, that means both of them are having difference of opinion, like husband and wife. Anyway, in this case, what do you think would happen? These problems applicable for May 21. Yeah, May 21, November 21, November 22, whatever. From the subsequent exams, everything, these questions are applicable. Anyway, in fact, May 21 is already over, long time back. Okay, fine. In this example, if both the persons, one group say yes, other group say no, that is, there is a 50-50 situation, majority will not come. We call it as a deadlock situation. In this case, the chairman can have a casting vote. So they have a additional vote to break the deadlock. And who can appoint that person? M Limited can appoint, which means M Limited without consent of M Limited can take the decision. M Limited can make 2 votes out of 4, and then casting vote, which means M Limited individually has power over MN Software Limited. There is no joint control. The extra catch is the casting vote. So, if you are reading or if you are preparing the accounts of financial statements of an organization, then you should look at the facts like this. Look at explicit joint control, implicit joint control. Is there any provisions in the articles like this giving the chairman the casting vote? And who appoints the chairman? If chairman is also appointed by both the people, I mean, things like that, that's a different situation. But the M Limited has to write the upon the chairman means their directors only become the chairman, so they will definitely have the power, have the majority. Okay, so then since M Limited individually controls, they become holding subsidiary and not a joint venture. Okay, hope you got it. I'll go further. ABC Limited is established by two investors, AB Limited, BC Limited, each holder having a 50% of voting rights. Okay, 50-50. As per the articles, ABC, AB Limited and BC Limited have the right to appoint 3 directors and 2 directors respectively on the board of ABC Limited. The directors appointed by each of the investor will act in accordance with the directions of the investor who has appointed such director. Okay, you listen to you, whomsoever appointed you. Further, Articles of Association provides the decision about relevant activities will be taken by the board through simple majority, whether ABC Limited jointly controlled by both the investors. Straightforward answer actually. The fact that both of you have 50% voting share does not matter, equity share, because decisions are taken by relevant activities, decisions are taken by board of directors. So, composition of board of directors is more important in this case. So, board of directors are appointed by 3 by AB Limited, 2 by BC Limited. So, composition of the board of directors are important, and composition means AB Limited, which means they have the control and not the BC Limited, because composition of board of directors is more important than the voting rights and equity shares. So, equal voting rights does not matter. ABC Limited is not jointly controlled entity. In fact, it is controlled by AB Limited. So, they are holding subsidiary, not a joint venture. Voting power does not matter. Composition of the board is important. Okay, hope you got it. Next. X Limited and Y Limited enter into a contractual arrangement to buy a piece of land to construct residential units on the said land to sell it to customers. A Limited and B Limited come together, they buy a land, they construct the houses, residential units, and they sell the land on the said land and sell the whatever the residential units to customer. Okay, reasonable. Building, real estate. As per the arrangement, the land will be further divided into 3 parts. Out of the 3 parts, both the parties will be responsible to construct residential units on one part of the each by taking decision about relevant activities independently, and they will be entitled for returns generated from their own part of the land. Third part of the land will be jointly managed by both the parties, requiring unanimous consent of both the parties for the decision making. Determine whether the arrangement is a joint arrangement or not. Okay, this is a combination problem. We have to answer accordingly. We have 3 parts of the land. One part of the land, X Limited will sell it independently and they are entitled for the return separately. Second part of the land, Y Limited will sell it independently and they are entitled for the returns for it. And there is third part of the land which requires unanimous consent of both the parties. So the first part and the second part do not require other consent. They can make the independent individual decisions. So the two parts will not come under joint control, whereas the third part requires the joint unanimous consent. So the third part requires joint control. So this problem, first two parts does not require joint control, is not joint operation, joint venture. Only the third part, which requires unanimous consent, requires joint control. Therefore, that is joint venture. And this can be a slightly different thing. Some other problem, there might be floors. You have three floors. First floor, one person controls. Second floor, other person controls. The ground floor, both the people need to have a unanimous consent. So ground floor will come under joint control, joint arrangement. Hope you're able to make that combination problem. So hope you understood. I'll go further. Okay, next. Entity R and entity S. Once again. Entity R and entity S establish new entity RS Limited. Here's an important catch. New entity being formed to construct national highway operate the same period for 30 years as per the contract given by given government authorities. Okay. What point you need to keep it in mind, my dear friends? When there is no separate entity, definitely it's a case of joint operation. Two types are there: joint operation, joint venture, separate entity, joint venture. When there is no separate entity, definitely it will be a case of joint operation. Of course, there has to be a joint control first of all. But if there is a separate entity, then we have to look at the purpose, the structure, the objective. There might be joint operation, there might be joint entity, separate entity, joint venture. Anyway, we'll read further. As per the Articles of Association of RS Limited, the construction of the highway will be done by entity R, and all the decisions related to the construction will be taken by entity R independently. So entity R will take the construction part of it. After construction is over, S Limited will operate the highway for a period of 30 years. So once the construction is over, then entity S will operate for 30 years. And all the decision relating to the operating of highway will be taken by entity S independently. However, the decisions relating to the funding and the capital structure will be taken by both the parties with unanimous consent. Determine whether RS Limited is a joint arrangement between R and S. So here, in some other problems, things used to be directly given. Relevant activities are decided by board of directors. Relevant activities are decided by shareholders. They used to give like that. But what is the relevant activity exactly is a question we have to answer in this question. Because construction is taken care by R Limited. Subsequently, once the construction is over, operation for 30 years is taken by S Limited, entity S. And funding and capital structure is decided by both the parties. So there is one construction activity, one maintenance activity, operation activity, and then funding activity, which is relevant. We can't say this is relevant and this is not directly. It depends on more facts of the case. So let's see what the solution is given by HCI. Investors should evaluate. Okay, you understood. We don't know what is relevant. In that case, how do you answer an exam? Investors should evaluate which is more relevant. In the exam also, you do like this simple thumb rule. If you are not able to make a clear cut decision that this is relevant activity, then you say that investor should decide which is relevant. Investor should evaluate which relevant activities can significantly affect returns of RS Limited. If the decisions relating to the construction of the highway operating or can affect returns of RS Limited, more significantly, then investor directing those decisions has the power and there is no joint arrangement. If the decision relating to the funding and cap structure is affected, then more significantly, RS Limited joint venture between R Limited and S Limited, entity R and DDS. So they are giving a situational answer. If construction is relevant, then R Limited will have the control. If operation is more critical, more significant, more relevant for the existence of the organization, then that is more relevant. Or if funding and capital required, in that case, both make unanimous decision. In that case, that becomes a joint control. Sir, no, sir. None of them are critical, sir. Individually, sir. In the sense, construction is important, funding is important, operation is also important. We can't say which one is critical, we can't say which one is more relevant. All are relevant. If you come to such conclusion, there is no joint control because all are relevant. There is a joint control. Anyway, so hope you understood the different situations in which you can answer in examination. Okay, I'll go further. An entity has four investors A, B, C, D holding 10, 20, 30, 40 voting rights respectively. Articles requires a decision about relevant activities taken by majority of the voting rights. However, investor ABC have informally agreed to vote together. This informal agreement has been effective in recent meetings of the investors, taken to the decisions of the relevant activities, whether ABC have a joint control. Now, the question is, what is ABC together? 10, 20, 30, 60%, and they have come together and made a joint arrangement informally that they will make a single vote. It's effective also in the past. 60%, they require majority. Yes, so these people is definitely are able to control the direction. Sir, they have taken informal agreement, sir. Does it have to be a formal agreement? No. Agreement between ABC need not be formally documented as long as there is an evidence. The contractual obligation between the parties can be explicit, can be implicit, but there has to be an evidence, can be written oral, whatever. It need not be formal document. So ABC have come together, you have evidence of that, which means ABC will control the entity as jointly controlled entity. Maybe it is a joint venture. It's a joint operation. I mean, it's a joint venture for sure. Hope you got the point. The agreement need not be formal as long as there is evidence, there is proof, sufficient confidence that they have come together, which means there is a joint venture. Okay, next. D Limited and E Limited have established newly entity DF Limited. Just 1 second. Okay. D Limited and E Limited and F Limited jointly establish a new entity DF Limited. As per the arrangement, unanimous consent of all the three parties are required only with respect to decision relating to the change of name of the entity, amendment to the constitutional documents to enter into new business, registered office change, decision about other relevant activities require consent only D Limited, E Limited, whether F Limited is a party to joint control arrangement. So only for major decision to change the name, change the objective clause, you require F limited consent. Otherwise, F limited is not required. Other relevant activities, operations organization, other relevant activities. Other relevant activities requires consent of D and E only. So F limited is not a party to the joint control of arrangement. So there is joint control, there is a joint arrangement, but F limited is not a party to it because their consent is not required to make the decision about the relevant activities. Okay, next. Entity A and Entity B establish a contractual arrangement whereby decision related to the relevant activities are required to be taken by unanimous consent of both the parties. However, in case of any dispute, okay, in case of dispute with any vendor or customer arrangement, entity A has the right to take necessary decision for the resolution of dispute, including the decision of going for arbitration or filing in such a court of law, whether uh, arrangement is a joint arrangement. Okay. Now, A limited, B limited will make the decision together and it requires unanimous consent also. It requires unanimous consent. But in case of a dispute with vendor, a dispute with customer, if you have a difference of opinion, some price negotiation differences, some kind of problem with the vendor or customer, A limited can go to the court separately, like arbitration separately, they can make the decision. Now, whether there is a joint control, the answer is yes. Because entity A and B always require unanimous consent. Only in this one particular case, that is in case of difference with the vendor customer, A limited can take an independent decision. So only in one or two cases, A can get separately does not mean entire structure of the organization is taken by A limited separately. It's not controlled by element separately. So right available the entity A to take decision for resolution disputes will not stop, will not prevent the management arrangement from being a joint arrangement. Yes, one or two extra rights will not be having a problem. It will be considered as a joint arrangement. Okay, next. P Limited and Q Limited are two construction entities and they have entered into a contractual arrangement to jointly construct a metro rail project. The construction of metro rail project involves various activities such as construction of the infrastructure like metro station, control room, pillars at the end of the road, etc. For the metro, laying of the tracks, acquiring of the coaches, or etc., the total length of the metro line is constructed is 50 kilometers. As per the arrangement, both the parties are responsible to construct 25 kilometers each. Each part is required to incur own cost, use its own assets, incur liability, and has right to revenue from the own part of the work, whether the arrangement is a joint operation or not. It's not a separate vehicle. Each party has right to assets and obligations for the liabilities related to their own part of the joint arrangement. So, the question is not whether it's a joint a venture or not. Yes, it is definitely a joint venture. The question is whether it is a separate vehicle or a joint operation. How to be accounted? Ind AS 111 will apply, or Ind AS 28 will apply. First of all, there is no separate vehicle, that separate entity being formed. If separate entity is not being formed, straight away you can say there is joint operation. If there is separate entity, then we look at the more details of it. You may get a joint operation, you may get a joint venture. But when there is no separate entity, you don't have to look anything else. Straight away you can say it's a joint operation. RS Limited and MN Limited enter into a contractual arrangement to run a business of providing cars of hire. The cars will be owned by both the parties jointly. Expense to run the car like driver, salary, petrol maintenance, and revenue from the business will be shared between both the parties as per the contractual arrangement. Whether arrangement is joint operation or not, again a straightforward, simple answer: there is no separate entity, no separate vehicle. When a separate entity is not formed, straight away you can say joint operation. If the entity is formed, then you look at the substance or the form. In the sense, what is the purpose of the entity? You may come to a conclusion for joint operation, or you may come to a conclusion as a joint entity, joint venture. But when separate vehicle is not there, separate entity not being formed, straight away you can say it is joint operation. Entity X and entity Y are engaged. Oh, people are also, I thought people are engaged, companies also engaged in the business of engineering, procurement, and construction for the customers. Both the parties have jointly won a contract from a customer for executing an EPC contract. engineering, procurement, construction. And for that, the parties have established a new entity. They have started a new entity. Then you have to look at the purpose of it. The contract will be executed through XY Limited. All the assets required for the execution of the contract will be acquired, and liabilities related to the execution will be incurred by XY Limited in its own name. Entity X and Entity Y will have a share in net profits of XY Limited, the ratio of the shareholding, which is 50% each. Assuming that the arrangement meets the definition of joint arrangement, determine whether it's a joint arrangement or a joint operation. Okay. Okay. Now, when there is a separate vehicle, you have to look at the more details of it, more facts of the case. Here they have not given, they says that XY Limited will do on its own name, but regarding the ownership, regarding the more contractual terms, they are not given. Legal form is a separate company. Legal form, separate vehicle, causes separate vehicle to be considered in its own right, indicates the arrangement is a joint venture, but in this case, parties should further evaluate the terms of the contractual arrangements and other relevant facts circumstances to conclude whether joint venture operation. So again, the decision conclusion is open-ended. But in the examination, you did not keep it open-ended. You can say that if no other information persists, you can say it's a joint venture. When you form a separate entity, the when you form a separate entity, basically it indicates it's a joint venture. But we look at substance in some cases. In the substance, is it like a joint operation? We'll come to conclusion like that. When the output of XY Limited is controlled by X and Y individually, the assets and liabilities are belonging to one entity specifically. For example, building belongs to X, furniture belongs to Y. If you have rights and obligations defined like this, it becomes a joint operation. Things like that. So when you have a separate points like this, separate facts and circumstances like this, then you can say joint operation. Otherwise, we go ahead and say separate vehicle indicates separate joint venture. That's what this point also says. We'll go further. Okay, next. Continuing the facts illustration above, assuming entity X, entity Y have entered into a separate agreement whereby they have agreed that each party has an interest in the assets of XY Limited and each party is liable for the liabilities in a specified proportion, whether the joint arrangement is a joint operation or joint venture. Hope you remember what we discussed. When there is a separate vehicle, it is joint venture. But when you have additional facts like this, assets and liabilities to be shared in a specific proportion as per the contract, which means it's not a case of joint venture, it's a case of joint operation. If these proportions were not defined, You don't own asset and liability individually, separately, or without a particular proportion. It's more of an entity and you own the entity. Then it becomes a joint venture. Since the proportions are defined, the assets and liabilities are owned by the entity separately, not by a separate vehicle. It's a case of joint operation. Hope you're understanding the process. Let me explain once more. See, entity X Limited and Y Limited, they have come together and they formed XY Limited. Okay. And XY Limited has got some assets and they have got some liabilities. So X Limited, Y Limited don't really own the individual assets and liabilities, right? They're collective ownership when you have a separate vehicle. So XY Limited, if you prepare a balance sheet, you will have fixed asset, PPE, current assets, current liabilities, something like that, and it's joint ownership. Collective ownership is with X Limited, Y Limited. That is your shareholding ownership, shareholding pattern. But in this case, what is happening? We are telling X Limited will own fixed asset, Y Limited will own current assets, X Limited will own fixed asset in 60-40, Y Limited will own current assets in 40-60. So when you have a proportions like this, you don't have a collective ownership as good as not forming an entity, because forming an entity means entity owns, you don't own. But in substance, even though entity is owning in the form, in the substance, you are having individual ownerships. You are controlling individual assets and liabilities. So we take away the lifting the corporate wheel. In a way, you can say that the separate vehicle does not matter, it becomes joint operation. That's what happening here. Hope you're able to understand. Next. Two entities have established a partnership firm with each party having 50% of the share in the net profits of the firm. Okay, having a 50% ownership. Assuming the arrangement meets the definition of joint arrangement, whether the joint arrangement is a joint operation or a joint venture. Question is open-ended. Answer has to be open-ended. They've established a partnership firm. So you should look at the purpose for which partnership firm, the legal form of it, what are the rights and liabilities of the firm, is the assets and liabilities are collectively owned or individually owned, is the rights and obligations are defined separately, how the outputs of the organizations are going to be distributed, points like that. So if I have to give you a chart quickly, I'll show you the chart, what you should look at. Okay. So you need to have, if look at three conditions for you to classify it as a joint venture. If any of the three conditions are not satisfied, it becomes joint operations. Legal form, Don't give the parties rights and obligations for individual assets. So, right, individual parties should not have rights and obligations of a specific assets. It should always be a collective ownership and not a predefined ownership. In that case, it is a joint venture. If you have a individual ownership, it becomes joint operation. Don't give the parties rights to assets and obligations. Yeah, this is legal form. Don't give contractual terms. One is legal form, other is contractual term, and output produced not entirely for the co-venturers. It is for the outside people also. So look at these three conditions. I think that is what even the institute would have told in the answer. Uh, in this case, the parties to the arrangement should evaluate whether the legal form creates separation between partners and partnership firm. Parties to conclude that they have rights and obligations for the liabilities of the partnership firm would be a joint operation. If the assessment of the legal form of partnership firm indicates the firm is a joint operation, there is no need to evaluate whether there are any other factors. It's concluded that partnership is a joint operation. Like, as I told you, you write down those 3 points. You can keep the answer open ended. Okay, I'll go further. Okay. Two parties structure a joint arrangement, an incorporated entity. So there is separate entity. We have to look at the additional factors now. Entity A in which each party has 50% ownership interest. Okay, so 50-50, two parties are there. The purpose of the arrangement is to manufacture materials required by the parties for their own, okay, individual manufacturing processes. Arrangement ensure that parties operate the facility that produces the materials to the quantity and quality specifications of the parties. Legal form of the entity and incorporated entity, though which are activities are conducted initially, indicates the assets and liabilities are held in entity A. All the assets and liabilities of entity A. Contractual arrangement between parties does not specify the parties' rights to assets and obligations for liabilities of entity A. There are the following other relevant factors, circumstances applicable in this case. So, legal form of entity A indicates entity A is the owner. Contractual arrangement between the parties does not specify. Okay, contractual arrangements does not specify the parties have the rights to assets and obligations for any liabilities of entity A. Okay, parties agree to purchase all the outputs produced by entity A in the ratio 50-50. Entity A cannot sell any output to third parties unless approved by two parties in the arrangement. Because the purpose of the arrangement is to provide the parties with the output they require, such sale to third parties are expected to be uncommon and not material. The price of the output sold to third parties is set by both the parties at a level that is designed to cover the cost of production and administrative expenses incurred by entity A. On the basis of the operation model, arrangement is intended to take at a break-even level. Based on the above fact pattern, whether it's a joint operation or a joint venture. Okay, so let me let me show the structure a little bit here. Okay. So, two entity, like there are two people, let's say X and Y. They have 50-50% each in entity A. Okay. There is a separate entity. You should look at three factors. One, contractual form, legal form, and the other is the uh, output utility. How the output is used. Output utility. Okay. Now, consolidation form is collective, contractual form, or let's say first. Okay. Actually, first you should look at legal form, then contractual form. Legal form, then contractual form. Okay. Legal form, it's a separate entity, so it's a collective ownership. No individual definition. Contractual form, also we have identified there are no individual definition of it. That is, does not specify parties have rights or assets and obligations. So there is no separate ownership, no separate ownership of assets and liabilities, no separate ownership, which means this is also collective ownership. So looking at these 2 points, it's a joint uh, venture. But if you want to classify a joint venture, all the 3 points should be classified. Point should be satisfied. First point satisfied, third point satisfied, the second point satisfied. What about the third point? If third point is also satisfied, then you can say joint venture. Even if one point is not satisfied, it becomes joint operation. Now, how the output is dealt? The output is not for outsiders. Output is for X and only. Output is for Y only, not for outsiders. Even if you want to select outsiders, it will be with the decision of X and Y together. That is also very minimal and to recover the cost. So, whatever the inventory of output, whatever we produce, X limit will take over separately, Y limit will take over separately, and later whether they sell or they consume does not matter. Whether they sell it to outsiders from their share or they consume and they make some other products does not matter. So the output of X Limited, output of entity A is primarily to fulfill the demand of X Limited, Y Limited separately, which means this more than entity, it's an asset. So if you have a machinery, both of you share it. You have a what do you say, like a telecommunication equipment, telephone towers are there, you share the cost, you share the cost of the asset, something like that. Or oil manufacturing company, you lay the pipelines to extract the oil, you share the cost of the pipelines, things like that. So this is more of an asset to produce the goods and you take out the goods. So this is not an entity in substance, it's an asset, and therefore it's a joint operation and not joint entity. That's what this whole paragraph will tell you. You can read through it later. This is the complete uh, solution given by the ICI. Ultimately, it indicates it's a joint venture. Sorry. Huh, okay, okay. uh, Okay, the fact circumstances indicate the arrangement is a joint operation. Then the last paragraph, if one more situation that thinking, one more situation, if parties change their terms where arrangement is able to, the entity is able to sell on its own, then it becomes a joint venture. But as of now, it is a joint operation. You don't have to write the last paragraph in exams. That's only for your additional knowledge purpose. Hope you got it. I'll go further. AB Limited, CD Limited have entered into a framework agreement to manufacture, distribute a new product, product X. The two activities to be performed as per the framework agreement: manufacture the product X, distribution of product X. Okay, first manufacture it, then you sell it, distribute it. The manufacturing of the product will not be done through separate vehicle. The parties will purchase the necessary machinery in their joint name. For distribution of the product, the parties have established a new entity. So for producing, there is no separate entity, but for distribution purpose, they have made a new entity, ABCD Limited. All the goods manufactured will be sold to ABCD as per the price mutually agreed by the parties. ABCD Limited will do the marketing and distribution of the product. Both the parties will have a joint control over ABCD Limited. So how the structure as of now, I'll explain it to you. So AB Limited and CD Limited have come together. They will have one joint operation and they manufacture the product X. Manufacture product X. Once it is manufactured, it will be sold to ABCD and then it will be marketed and sold to outsiders. Subsequently, will be marketed sold to outsiders, customers. That's a process. Legal form of ABC Limited will cause to be considered as its own right assets and liabilities held in the ABC Limited or assets and liabilities of ABC and not the assets and liabilities of the parties. Okay, I think it's ABCD Limited. Further, the contractual arrangement and other relevant fact circumstances also indicate otherwise. Do not indicate otherwise. Determine whether joint arrangement under framework, joint operation, joint venture. Okay. Now this manufacturing product X is there, right? This is definitely joint operation because no separate vehicle. Now this ABCD Limited, where AB Limited ownership has it, CD Limited has ownership. Three conditions to be looked at: legal form, separate entity; contractual form, no separate ownership; outputs sold to outsiders. Therefore, all the three conditions are satisfied. So this ABC Limited is a joint venture. So for this Ind AS 111 accounting will apply. For this Ind AS 28, that is equity method of accounting, will apply. Got it? Detailed institute solution, oh, only so much. They have given this. So it's a joint venture. Manufacturing is a joint operation. Distribution is a joint venture. So what I told you is what they've given as the answer. In the exam, you should write these 3 points also to justify your conclusion. Okay, I'll go further. Okay, next one. Entity K is owned by 3 institutional investors, MNC, holding 40, 20, 20 respectively. A contractual arrangement between M Limited and L Limited gives the joint control over the relevant activities of Entity K. Okay, they only have given it straight away. It is determined that Entity K is a joint operation and not joint venture. They only have given. C Limited is not a party to arrangement between M and N. However, M and N C is also has rights to assets and liabilities, obligations for liabilities relating to joint operation in proportion of equity interest in entity K. Would the manner accounting to be followed by M and N on one hand and C limit on the other hand in respect of respective interest be same or different? You record explain the light of relevant provisions to the relevant standard in this regard. Okay, read this problem once more. Okay, let me give the facts of the case once more. Okay, entity K is owned by three investors M and C. Okay, so M Limited, N Limited, C Limited having 40, 40, 20. 40, 40, 20 in K Limited. K Limited. It looks like a joint entity, right? Because separate vehicle is there. But read further. A contractual arrangement between M and Limited gives them the joint control. So M and N has the uh, contractual arrangement. M and N has the contractual arrangement, and therefore they have the joint control. It is determined that entity K is a joint operation and not a joint venture. That's important. It is given it's a joint operation and not a joint venture. That means no sub entity. We are removing, we are lifting the corporate will. We are going beyond substance over form. We are not going for the form. We are going for the substance. So it's not a joint it's not a joint venture. It's a joint operation. C Limited is not a party to arrangement. Yes, C Limited is not a party between M and N. However, like MN Limited, C also has the rights and obligations for liabilities related to the joint operation proportion of equity interest in entity K, which means C is not part of the joint contractual arrangement. C is not part of the joint control, but just like MNC has 40%, 40%, C's also have got some sort of exposure, equity interest. The question is, would the manner of accounting by M Limited and N Limited on one hand and C Limited be same? That is, how M and N accounts, accounting of M and accounting of C Limited, will it be same? That's the question. Okay. So what does the standard say? See, if it was a joint entity, if it was not a joint operation, if it was a joint entity, M has got a joint venture, N has got a joint venture, they will prepare as per consolidated financial statements Ind AS 28. But joint operation means Ind AS 28 will not apply, Ind AS 111 will apply. So what does Ind AS 11 will tell you? Everybody who is a party to joint operation, you may not have joint control, but you are a party to joint operation, you will account for it. So all the three will account same. Okay, let's see what the solution says. Then I'll read what does Ind AS 11, Ind AS 28 says also. Ind AS 111 states that a joint operator shall recognize in relation to interest in joint operation. Joint operator shall recognize assets including the share, liability including the share, revenue including the share, share of revenue from the sale of output, its expense including its share. A joint operator shall account for the assets, liability, revenue, expenses relating to its interest in the joint operation in accordance with Ind AS applicable to the particular assets, liabilities, revenue, expenses. Further, read further. Ind AS 111 states that third part, a party that participates but does not have joint control, entity C. participates in this operation but does not have the control of joint operation shall also account for its interest in the joint operating interest according to the above provisions. So, if the third party has the right to the assets, yes, NSC Limited has the right to the assets, obligations, liabilities relating to joint operation. So, in the given case, all three investors, everyone will be accounting for it. So, basically, what this point is trying to tell you is this: under Ind AS, when it is a joint operation, we apply Ind AS 111. So we have three companies, M, N, C. M Limited, yes, is the joint control, has joint control. JC, joint control. N Limited has joint control. C Limited has no joint control, but is a joint operation. If when C Limited has the right, even though no joint control, but has the rights and obligations to the operations, assets, liabilities, all the three people will have to account similarly. Account similarly. But if this was, if situational, I'm telling, if this was a joint venture, separate entity is a joint venture, then you apply Ind AS 28. That is equity method of accounting. M Limited, N Limited, C Limited. M Limited will apply, N Limited will apply, they have the joint control. C Limited don't apply. They will go for regular Ind AS 109. They will account it as an investment in this joint entity. Investment in whatever the company name. You are ownership of 20%. Investment in the shares of the company. You account as FETPL, FETOCI. You don't do consolidation. You only report in the separate financial statements. Hope you understood. If when joint operation, you will take it in the, you have to prepare both, of course. Prepare both separate financial statements and consolidate financial statements. But when there is a joint venture, A, M, and N have joint control, they prepare both. But C, who do not have joint control, when it is a joint venture, they will prepare only separate financial statements. They don't prepare consolidated financial statements. Okay, so hope you got this point as well. Some questions are skipped in between. They are repeated once. Maybe they are printed in the material once more. Please check it out. They are the same questions which was there, which I have discussed. Any questions in between which is not done, they are repeated ones. They are already discussed. You can check it out. It's a repeated ones. Hope you got it. Hope you got it. Okay, great. Okay, so we'll stop at this point for today. We have done the joint venture in days 111. Tomorrow, when we meet, we'll take up in days 28, which is about problems on investing in associates. Significant influence. So, we'll see you tomorrow at same time. Till then, take care. Bye bye.